just a few more little kind of hard questions for Alex. So one of the other questions that comes up in Ireland, and maybe Andrew can chip in his views, or anyone else in the panel, of course, is the whole regulatory comfort with this. This deal was done last year. There's been various reviews and correspondence with the regulator. My view, from what I see, and maybe you can, just add a little bit of color, is that, this deal was done in accordance with MiFID and all the local rules and regulations. It just happened to use a new technology in a novel way, but everybody was very happy with how it was put together and executed. So would you say that the regulator is was open and happy that this transaction took place, and is okay with more?
No, they were totally, I wouldn't say they were happy, I don't know, but they were cooperative, and they were, yeah. So actually BaFin had, besides real estate tokenization, they had in the year 2020, early 2020, they had more than, I think, 250 or 300 application for STOs, and only a handful were approved. So we were not the first one applying for an STO in Germany. However, it was the first retail one, and also cross-border. But I mean, all regulators around the globe, I'd say lots of things have changed in the last 2-3 years. Like, we have a lot of professionalism in the industry. All the major players are looking at tokenization or blockchain applications. So we never believed that we won't get the approval. It was just, how long will it take us? Is the guy sitting at BaFin, does he know what blockchain is? So it's always, you have an authority in Germany with 2,500 people. If you get the wrong one, it might take you much more longer. So I'd say we had, I'm not sure if it was luck, but it was a good deal for us, and was, I think, for both sides, a good learning.
One of the other questions, one of the other novel features of how that was so you're doing a regulated raise of a financial security that is tokenized, and the project was able to accept Ethereum and Bitcoin as well as fiat into the project. Can you maybe just give a bit of background on how that was managed, and how what different processes might have gone into place to make sure that was done properly?
Yeah, so in all our projects so far, I mean, in the end, the issuer decides what currencies he wants to accept: crypto, fiat, or both. With Tigris, Bitcoin, Ethereum, and Euro were accepted. Whereas we made the experience, no one invested with crypto. Everyone only fiat money. And this was also a big surprise for us. Our anticipation was everyone who invests in crypto will also invest in tokenized assets, because it's the same technology layer whatsoever. But then we learned that all the traditional crypto investors are looking for much more yield, or they are more risk. They take more risks, and they don't want to. So in the end, everyone invested with euros.
Is that because no one wanted to be the story in 10 years' time of the pizza the guy that bought the pizza 10 years ago with Bitcoin? No one wanted to be 10 years' time from now, 2031. I don't want to be the guy that bought the property with Bitcoin if it goes up substantially in that time.
I guess
it probably was. And it is interesting to see, but the infrastructure was put in place and it allowed for it. But this goes back to the difference in, we're talking about the use of blockchain technology in both cases, but the type of person and the type of investor that is looking at these types of deals is quite different than your regular Bitcoin investor. There's not a huge amount of crossover. So okay, then I'll stop having a go at Alex after this one because he's getting all the questions out. The other thing, right, is we get deals in from all over the world. Okay, can you talk a little bit about how we approach structuring them? There's every type of everything landing on the desk, and then if that has to be sold in the European Union, it needs to be arranged in a particular way. So can you maybe just give a bit of your views on how we approach that at the moment? It's very ad hoc, I know, and there's no set path, but just to give the audience an idea of how these things are structured.
Who are you asking, Brian?
That was Alex again.
Mahesh, he was off the hook.
Dive in if you like. Because I know that
Asia is so fragmented, right? I mean, we're dealing with so many different countries, and each one of them has varying laws. So just overcoming that in itself, and I think Alex pointed out also is that, you know, in the government departments, do they understand blockchain? And a lot of our Asian countries don't get it. They think it's still a scam. So until they really, I mean, and I'm not talking about the people who are knowledge. I'm talking about your tellers, the counters that you have to go to, and the professionals that you go to. It still hasn't set in that blockchain is here to stay, and it's not a scam. It's about recording and validating information that is sustainable for the next 100 years, and it's the only way we can go, right? So I'm not really one who can answer it, but back to Alex.
No, yeah, I totally agree. Like, we made the experience in Luxembourg 2 years ago that our contact at the bank didn't know the difference between blockchain and Bitcoin. So, and we needed to describe, okay, blockchain is the overall concept, and there are thousands of blockchains out there, and Bitcoin is just one. And yeah, so this is so we see two challenges in the market in general. The one is education. And this will take a few years, but everyone knows what we are talking about. And if I invest in a security token, I need a wallet, and what is a wallet, and so on. And the second thing is what we see in particular with institutional investors is technical infrastructure. So we are having talks with asset managers, private banks, whatsoever, or the classical institutionals like pension funds, insurances, and they say, yeah, interesting project, I would like to invest, but my asset management system is not capable of holding security tokens yet. So this is a second challenge we see. This is nothing we can solve as Black Manta, but more and more custody providers are coming up and support them. And we know it will take time until we're fully there where we want to have the market. What we did already, also with the first project, and this was very important, to get an ISIN, because like many countries, or most countries have adopted ISINs as a secondary measure of identifying securities, like for trading, clearing, and settlement. And in particular in Europe, the ISIN is the primary means of identifying such securities. And it was very important for us, in particular when talking to asset managers, to have an ISIN, because then they can have it on the books. They don't lose asset under management, and so on. So I think you need also to understand the traditional capital markets in order to survive in the digital space, because some things won't change even if it's digitalized.
Maybe before we move on to the next presentation, we just deal with some of the QAs that are there. The first is from Paul, and it says, when looking at a tokenizing commercial property, what aspects of the property do you consider? Age of building efficiency, building fabric, ages of systems, and or other aspects. Maybe I'll start off with my answer, and it's related to some of the stuff we talked about a minute ago about Bitcoin, and earlier on when I was talking to Pete about the Moon and Lambo Brigade not being interested here. I think that people who are looking at this sector and are investing in this are interested in the normal things that you'd expect out of any asset. So I think that the analysis of whether an asset is good or bad when it comes to a property is no different about whether it's tokenized or not. You might have some unique characteristics around the security that is created, but the underlying property, it's still a bad investment if it's built in a swamp and it's going to fall over. So I don't know if anyone else wants to chip in on answering on Paul's question.
If I could just add, is that when we look at things in Hong Kong, we're just looking really at the growth of the capital returns, the potential capital return. If give you an example, we've been growing at about 20% per annum, property assets in Hong Kong, which is very, very high. And that's really driven because of our government in Hong Kong stating that we have scarcity of land. And because of scarcity, we have to actually reclaim from the harbor, from the waters, and build on top. And then the government says, okay, if 53% of my GDP is going to be derived on land, property, transactional taxes, I'm going to ensure that scarcity exists. So because of scarcity and the premiums that the government's getting, land prices are going up, and therefore property investments are going up. So if you're putting down 30% and your asset value grows 30%, you're doubling your money by only putting 30% down. And so it's a lot of drive and activities into the growth, the capital return, capital gain, as opposed to really judging and understanding what is the quality of the build or what is the property in itself. And I can only say this as a geography of Hong Kong, Brian, which you know is that we're just all very tight, very close to each other. But different countries have different values. In the UK, you could buy, you can buy a square meter of land at £9, and here you can't even buy a Coca-Cola for with a whiskey in it for £9. So it's really it's really where you are and the environment of the property market into which you're looking at. You have to look at the surrounding growth and potential return in that area. That's where I come from.
Cool. So maybe moving to the next question from John, and I think that when Peter was speaking earlier on, he addressed some of these questions already. So maybe I'll ask Peter if he could answer John's question about, apart from the smaller investment commitment, what are the advantages for investors with STOs?
Well, the question exactly is, can you repeat it?
The QA, you should be able to, if you click on the QA button, I think probably at the bottom of your screen, it should be the first question left.
Here it is. Apart from potential smaller investment commitment, what advantages are there for investors with STOs? Well, basically, it's having you possess a digital token, so it's in your property, it's in your wallet. And I think that makes a difference, because if you buy stocks, for example, basically you have nothing, just a bit of paper from your bank. That's it. So if the bank goes bankrupt, or I don't know, it might have gone. The digital token sits in your wallet, and you've got self-custody over it. And I think that's like cash in your pocket, So it's your responsibility to take care of it, but if you do, you won't lose it, And I think that's a great potential, because you can get a better oversight of investments. For example, as in my case, I've got investments in startups, the traditional way. And the only way to get the oversight of it is to carry a sheet where you fill every data in it. And I think if you can convert it into digital tokens, it makes much more sense, because you get better oversight of investments.
I'd like to add something here. In addition to what Peter just said, first of all, you get access to asset class or to assets you haven't had access before. Like, I can buy 1 square meter in an apartment in the inner city of Berlin. And the second thing is, and as Peter said, you have the token, you carry your token yourself in your wallet, and it's transferable all the time. So if you invested in a startup, to get to sell your share, to get this liquid, is very hard, or in any other traditional assets, if it's not listed in the stock market. So we're also talking about more private equity stuff here. But with your token, you can, theoretically, within a minute, I can peer-to-peer sell my token to anyone. And this is not possible in most other asset classes.
Yeah.
I think this is one of the main advantages.
So yeah, so you're able to actually own your asset rather than entrust somebody else. Or if you choose, you can still give it back to the bank, and they can custodize it. So it gives you choice. Yeah. Okay. Evangelos, I think I'd like to, that's a lot of commercial sensitive stuff in there. Maybe we follow up on that afterwards. You can call one of us and we can have a discussion on Richard. So the liquidity for token holders, maybe I can go back to Pete a little bit on this one. He described it a little earlier as the Holy Grail. I think from my perspective, what we're seeing in the market is that a lot of the infrastructure and players that are required to make this market happen have been getting built. And the opportunity for liquidity and things like that haven't really been there until now. But now we have T0 in the US, Archax here in Europe, Fusang in Asia, and all sorts of other peer-to-peer platforms built into the technologies. We have a lot of choice about how liquidity goes, but today there's not very much. So maybe Pete, you can give us a few words on, achieving the Holy Grail.
Yeah. I mean, I think the question from Richard was along the lines of funds, right? And the waterfall calculations that you need, given the fact you've got a whole bunch of different investors, generally institutional investors, that are investing in a real estate fund at different points of time, or different projects are being invested in. So you got to get, it's hard to get the fee calculations right in a nutshell, but I won't get into how that works. But I think the question was around, are there some technology platforms that are coming with regards to supporting security tokens that will specifically enable institutional investment to better handle this whole fee side? Yes, absolutely. I think there is. The connectivity of that to liquidity and being able to then transfer your asset means that it's going to be a lot easier to be able to trade these tokens net of fees or gross of fees or whatever it may be, right? In the same way that you can buy an index fund and select whether or not you want dividends to either accrue into your price or you want them to be paid to you in the form of income, right? So there are a lot of complexities to supporting the fund side of this, working with, like I said, a fund admin chain. Fund admin chain started as a platform for mutual funds, right? For publicly listed, publicly operating mutual funds, and is going to market on that basis. But there was so much interest from the private market side, particularly around real estate, because it is such a big market, 227 trillion, like you mentioned, Mahesh, that there is a lot of interest in seeing how that type of platform could be utilized to bring real estate funds, right, to the masses, which is a little bit of a different story. But that's the big thing. Can you get these funds trading on exchanges like T0, like Archax, like others, and that you're bringing those big players to market? I was talking to the guys at Archax about this a couple of years ago and said, listen, forming that club, right, of asset managers that are out there, institutional investors that are out there in the specific segments where some of these deals may be coming to market first, i.e. in real estate, or in private equity, or any of these paper intensive assets. Forming that club is critically important, and that outreach and managing that community. And Graham Rodford, the CEO, is like, dude, we're already doing that. I'm like, okay, good. Your idea is well in motion then, because it's critical, is that it's wonderful that you can have the opportunity as an investor to sell your asset, but you need buyers coming to the venue on the other side of it. And that is like managing a community and getting the right people on board to do that for you.
Okay, quickly, and then moving to Samuel. So Samuel, I think, again, I'll start off by answering your question. I think that, of course, like any investment, no matter what it is, your previous experience and track record is most likely going to be analyzed by the people looking to invest in the project. And typically, so far in the world of security tokens, they're not translated into cryptocurrency value, rather a fiat currency value. That may change in the future, but today it's all been done with fiat, even if it is central bank digital currencies, like was recently done by SocGen and Santander with the European Investment Bank in their recent token. They used a CBDC by the Bank of France. And then company Kovac, extremely interesting, and I want to get there, but maybe we'll do that after Andrew's little bit on legals, because some of the questions you're asking here are related to legal. And I would say that getting things onto Uniswap is quite different than putting it into a DeFi ecosystem and funding it by using those liquidity pools. So that's something that we can talk about in our last session after we finish with Andrew.
Okay, so I'm just going to try and share my screen. Share that. Yep. Can everybody see that? And let me just switch that over. So there we go. Right. Okay, so in terms of what we're going to talk about today, I mean, some of these things have been covered already in terms of the background to tokenization, so I'm not going to dwell too much on that. I'll leave that to the technical minds on this presentation. It's really just to talk through some of the things that we look at when businesses come to us that are interested in tokenization. We look at the tokenomics, some of the legal considerations, and then some of the challenges as well that we think need to be overcome if you're going to go down this road. So we've obviously spoken about some of this already, but as everyone will now know from what the others presenting have said, when we're talking about tokenization, we're talking about issuing a digital token on a blockchain, which is representative of an underlying asset, and there's an underlying smart contract solution which automates a lot of the process. This here is just a nice, concise, simple example of what a tokenized structure looks like. Again, we've covered some of this already, so I'll just be brief, but one of the things we ask anybody looking to embark on this journey is, what is your end goal? What do you want to achieve for your business? And the thing that comes up time and time again is the process is slow, the process is archaic. The way in which one acquires property has barely changed in decades. And what we ultimately want to create is take what is the world's largest asset class. I think someone said, you think from when you're starting university or from when you're starting school, you think one day I want to own property. It's a vision, it's a dream that most people will have in some way, shape or form. You take that interest in an extremely popular asset class, which is entirely or very illiquid, the ability to make that liquid and in particular have access to secondary markets is ultimately the appeal that people have. And then the second most popular thing is perhaps the barrier to entry. Lots of people would like to invest in property, but it can be a difficult thing to get into because of the cost, usually. So in terms of what we start looking at from a legal perspective, so a company comes to us and they say, yeah, we want to set up a platform, or we have a big portfolio of properties. We want to tokenize them. We want to create a real estate token. And that can mean lots of different things. So the first thing we look at is tokenomics. So we will go down, and this is almost the same process with every project that we're talking to and have spoken to, particularly in the last 6 months. So are you trying to create a digital representation of the property itself? Are you trying to create a digital title effectively? Are you not trying to do that? You're trying to do something slightly different where the token gives you a rental income, for example, or just access to capital, a payment of some form when the property is sold? Or are you not trying to do that at all? Are you actually tokenizing a share in an SPV, in a special purchase vehicle? So are you tokenizing equity? And that special purchase vehicle owns the underlying property. So you're not actually saying you own a little piece of the property. You're saying you own a piece of the company that owns the property. Or, different variation, are you tokenizing interest in a trust? And that trust can own all the shares in a company, and that company itself can then own the underlying property. Or something else which we're seeing a lot more of now, are you actually tokenizing debt? Are you saying, effectively, this is again a quasi crowdfunding model as well. Are you saying we will crowdfund the finance requirements for the development or acquisition of a property, and then you're effectively tokenizing the debt itself? And all of these are things that we've come across, particularly in the last 6 to 12 months when talking to people embarking on this. So in terms of some of the legal considerations that we would then go through when looking at these projects, the complexity of the structure is often a cost to benefit exercise. And again, this depends on the scale. You know, are you tokenizing one single title? Are you tokenizing an apartment block? If you're tokenizing one single title, is it 500,000 property? Is it 1 million? Is it 10 million? Are you tokenizing a portfolio? And a lot of the time, tax is the driving factor, the most tax efficient way that it can be done. In terms of looking at structures, you could be a private company. This is if you're the issuer now of the token. You can be a limited partnership, a trust, a fund, or a combination of all of them. If you are going to be doing this in Ireland, chances are you're going to be regulated by the Central Bank of Ireland, as well as, well, if you want to, and European legislation that applies to Ireland. As we briefly touched on earlier, there's some new legislation that came in April, towards the end of April, regulating virtual asset service providers. So pretty much anyone that is issuing a virtual asset, custody of a virtual asset, management of a virtual asset, will be subject to registration requirements now in Ireland. And it's perhaps a little more than just simple registration, because you have to go through a fitness and probity test, which is usually for regulated businesses under MiFID that you have to go through. But it is sold as registration, not full regulation. And that's at the domestic level, that's for Ireland. At a broader EU level, we have some legislation coming in mid to late 2022, I think. Markets in crypto asset regulations, referred to as MiCA. And that is going to make the European Union the largest regulated area on earth for crypto. Again, we're going to have the ability to passport services around crypto once you get regulated. And amongst other things, this will regulate real estate token offerings, not just real estate token offerings, but all sorts of token offerings. What this won't do is regulate security tokens. That's still going to be covered by existing legislation under MiFID II, which also regulates, amongst other things, banks and payment services providers and people embarking on more traditional IPOs. So then, in terms of the investors that you want to target for your token offering, is this just an open-ended offer to the general public? Where are your investors going to be based? You know, people are often concerned if the investors are going to be based in America because of concerns around the SEC. More often than not, people are saying that are building their platform, they want to do a combination of a private offering to retail, high net worth individual and institutional investors, a mix of all of those, with the bulk of it coming from the high net worth individuals and the institutions initially. And then, as I think was touched on earlier, if you're going 8 million or above 8 million, you're subject to prospectus rules, the same way that you would be with an IPO. And then later this year, we also have rules coming in around Europe regulating crowdfunding. So that's going to be the sub 8 million, and that is going to fill that gap in the space. In terms of the tax considerations, this is always a factor. Much will depend on the underlying tokenomics. So if we go back to what we were saying previously, if you are issuing a token which is deemed to be a share, there is one tax regime. If you are issuing a token which is deemed to be property, then you have a stamp duty consideration. And if you're not doing either of those and you're issuing a share in a partnership or dividends, then that's another tax consideration. So all of those need to be considered. As far as general principles that will apply pretty much whichever structure you're going with, a structure obviously needs to be put in place to ensure the rights that are being granted to the token holders are established through appropriate and proper legal documentation. And the big thing that will apply to pretty much everyone as well is know your customer, KYC, and anti-money laundering rules and regulations. And that will be pretty much around right around Europe, whichever jurisdiction you're going with. It's hard to get away from that. The more mainstream the sector gets, that's inevitable. In terms of some of the challenges that I think anyone involved in this will face, and again, whilst this, of course, applies to Ireland, I think certainly the businesses that we're advising in the UK, the same thing applies, and again, I suspect around lots of Europe as well. So we have to factor in again stamp duty, as we said. If you're transferring land or property or shares, there is a stamp duty element. Now, one can, of course, take the view that the onus is on the individuals owning the tokens and transferring the tokens a lot of the time. They'll have to file their returns with the revenue. So ultimately, it's not just down to the issuer, but you still have to put a structure in place that is workable. From a more traditional legal perspective, what sort of rights, if any, will the holder of the tokens expect? Will they expect the traditional sort of rights of ownership that you would have with property, like rights to possession or quiet possession or access to property? And then from a practical perspective, which we are now starting to see, is the coordination between the land registry, the various land registration authorities around the world, and the blockchain protocol, which is managing the ownership and transfer of the tokens. Now, this, I think, this is what really can take this up to the next level. And I think there's a project already ongoing in the UK. Consensus and HM Land Registry, I think, are doing a project at the moment, I believe, for the digital tokenization of title to property and the ability to completely digitize that and integrate that with the land registry. So that would mean, one, stamp duty is paid very, very quickly, and two, that has a massive impact on potential secondary markets. And look, with any of these, none of these challenges are insurmountable, and certainly we're fairly confident that we can navigate a way through any of these. And that is it.
Sorry, just getting some questions in here. So just before we go on to some of the fun stuff, and I think there's going to be great things towards the end of this with DeFi and everything. I have one in here. What happens to my tokenized asset if I get divorced? So please have you, Andrew.
Very, very good question. I'm not a family lawyer or a divorce lawyer, so I don't think I could give the most substantive answer, but I guess it's the same as any other asset. I suspect it technically you should be disclosing it. Yeah. Technically you should be disclosing it.
That's so funny. My mom sent me an article on cryptocurrency and divorce. My mom's a former family lawyer, Andrew, just so you know. She's now retired, and her comment was, "Listen, I'm glad I'm retired and I don't have to figure these things out."
Yeah, minefield. Yeah.
Same as any new technology, I suppose. But yeah, okay. So thank you very much, Andrew. We might dip into some of the other hardcore legal stuff like MiCA and things like this. But when I look at what we're talking about this gigantic asset class that has all of these little issues that this technology helps fix some of the issues for. And one of it, say, is access to capital and access to new types of capital. And I think that company Kovac's question is hitting some nails on the head here about if I have an asset that is a real world asset, like a property debt or something like this, how is it that I can access a liquidity pool? So maybe I'd just start off with getting Peter's opinion on this. And then I think we could talk for another 2 hours about DeFi and real world assets, but we'll start off with Peter.
Well, that's exactly the question I was figuring out last week when I had a meeting with Alexander, because I thought, wouldn't it be great to have all these Tigris security tokens from the real estate projects on Uniswap? But unfortunately, that's exactly where worlds divide, because you've got the regulated space and they've got the unregulated space, and Uniswap is completely unregulated. Anybody can put a token on there, and that's it. Yeah. And the Tigris token is regulated. So my question was, what would happen if I transfer my security tokens out on Uniswap, because it's possible, technically possible, and the answer was the smart contract wouldn't allow it. So that was pretty interesting to me to hear, because it's programmed into the smart contract to keep these security tokens only in the regulated space where all the KYC is done. Yeah, and as soon as you get venture out on Uniswap, yeah, it's not possible.
So, but there's probably other things that are looking like being possible. So if you were to, for instance, take MakerDAO, and you look at how you can collateralize real world assets into it and then access the pools in there for funding, that's doable. And that is something that we're doing. We can have another discussion on it another day. But that whole world of real world assets meeting DeFi, it's actually just one of the things that we're working on. They're actually having a discussion for Blockchain Ireland on this exact topic tomorrow. I can't remember the time, but we can share it around to whoever is interested. The other thing I would say that I would look at in this space is some of the synthetic work that's going on. And there's new innovations happening every day. I find it absolutely impossible to keep up with each of the new innovations. But I think that nexus between real world assets and, and I suppose essentially, Andrew, what is, in the Mika bucket is one of the places. It's one of the places where people are innovating this year, and we will see solutions to that coming through. I don't know, with labs and everything else, with your staking and so on and so forth, Mahesh, are you dabbling in the same sort of space in between the real world assets and the pools of capital in crypto?
Yeah, it's still a legal question that we have that we're trying to resolve at the moment. So I really can't delve too deep into this at the moment. But yes, real world and digital, I think one of the areas that seem to bridge this is possibly NFT, coming in with tokenizing in terms of NFT launch, and that could actually allow for people who buy that token to trade it as they wish to trade it. But as what Peter was saying is, things can be tied in through a smart contract. The problem is always about the legitimacy and ownership of that wallet address, and ensuring that when you share your profits and you're sharing out income, dividing income out, it has to go to the person who actually owns that token. And if you trade it out, how do you really know that it's been traded out? So there's still many questions to be answered, and we're still discovering those issues.
It's true. This is where you get into marrying a self-sovereign digital identity or something similar to the security. There is one platform that is out there that is attempting to do that bridge. So they're attempting to have access to DeFi via an identity module, if you want to call it that. Connor, answering your question, yes, I have a real-world example of a case study of putting real-world assets into crypto. If you send me a message afterwards, I'm happy to share it with you. I think it's one of the more exciting parts of this year, and it's where it's the bridge where Black Manta will probably provide that the rails. So the regulated rails will probably be provided by companies like Black Manta. It's a super exciting part of 2021. So any other questions? I suppose if I was looking at doing a raise, and I was to knock on the door of either Mahesh or Alex, and I say I want to raise in Asia and in Europe and in America, is that something that is doable this year? If you obviously would have to be a substantial project to want to do that, but is it doable? Is there partners? Is the infrastructure available to allow that to happen now?
Alex, go ahead.
So with us, it's possible. As I said in the beginning, we have partners in the States, as well in some Asian countries. So the idea is to have one platform for global security token offerings, but it's essential and you need local partners, in particular like regulated ones. So we are working with broker dealers in certain non-European jurisdictions, as well as legal partners to set it up, because it's a security in the end, it's regulated. Yeah. But it is already possible. We have cross-continental projects already on our platform. But it's a lot of, I would say, work to get this done, and therefore, as you said, the investment size or the project size should be essential.
Yeah, I agree with Alex. I think it's always the first project which is really your it's pulling teeth out and going through the various different jurisdictions and government protocols. But we're very fortunate that Singapore is very open to the crypto world, and where you have a bank that allows you to that understands the trade of crypto, and having an institution, a major institution that's ready to sit with you and talk to you, it creates a structure that you can actually build on, because you do need that anchor. You do need that fiat exchange. You do need that understanding in a banking environment. So we look at Singapore as a place. I mean, even though I'm from Hong Kong, we look at Singapore in terms of structural establishment, and then from that see how we can address the various jurisdictions on where the properties are onboarded and how it's going to be onboarded, the structure of that. But again, coming up with the first is always the going to break ground to being building your foundation for future growth.
I think the same way you in Hong Kong are looking at Singapore, in Ireland we're looking over at Germany, where you have banks and other regulated financial institutions participating in this market. And I think it's a matter of time before it flows both ways.
Eventually, that's right. That's right.
So I suppose we can say it's possible to do an issue today that is global. Yeah, it might be one of the first and might have some challenges. However, this is possible and doable this year. And this is also something that is possible that will be traded on these new exchanges as well. So if I was to flip over to the other side and maybe ask Pete a question, you're sitting with many hats, be it from Norio Ventures and Coinbase and Funded Mint Chain, lots of different things that you're involved in from the perspective of digital assets investors. If we can create these assets, do you think that it's attractive for investors? Will we see that this is the first year where we're going to really get traction with investors?
I think it is, and I think it's coming at it from a perspective of the longer term evolution of the capital markets, right, to truly digital assets, and where it, right now we've got a space where you've got traditional securities and you've got digital assets. Well, the next step is for that to become, digital securities, and then we drop the tag digital because it's just securities, right? And we move in that direction. I think there is a certain, when you look at it from an individual investor perspective, are there opportunities to bring more investors into this space with real estate assets? Absolutely. I fully believe so. Is there an opportunity to create this crossover point from some of the crypto natives and the crypto curious? I think that depends on how you position this, right? Can I, through a wallet that is most popularly used amongst the crypto curious out there, the big leading crypto players, could I at one point see my investment in a property, in a property token, alongside my Bitcoin, alongside my ETH, alongside my, digital dollar, right? I think that's where all of this is headed, and that this just becomes a certain type. It's not that you're investing in digital assets, you're just making an investment, right? So I think there's I think these two paths will continue in parallel for a little while, but I think the great merging of it is underway. Again, when you look at it from an institutional investor standpoint, I mean, some of the things going on here in Ireland, for example, alone, there's just so much opportunity. We have the new investment limited partnership framework, and it was originally came to market in '95, and it's now was upgraded just last year to be more on par with Luxembourg and Delaware. Again, this is in the fund space. When you're doing investments in tokens from a fund perspective, you need a whole bunch more alignment going on, right? You need your service providers, whether it be the fund administrator, the custodian. Does that custodian have a global custody arrangement with a crypto custodian or a digital asset custodian, right? The depository themselves, evidencing the existence of assets, all of those types of things. There are a couple of providers here in Ireland who are dipping their toes in that water and who are saying, yes, I will do this because they have experience in handling digital asset funds in other jurisdictions. So I think it's, you know, I working with a few folks in this space where we're trying to get some stakeholders involved, and those stakeholders will go out to their own customers and, you know, asset managers and say, hey, you know, what do you think the market is for tokenized funds? It's not the right question, right? It's, would you like to move into an ecosystem where you have this enhanced automation and transparency and liquidity opportunities? It's not going out and asking your investors, hey, will you invest in a tokenized fund? It's like, are these key features of this product important to you? And how can we position that to maximize the investor interest? I think that's how I'm looking at this.
Exactly. So you're looking at a suite of features that sometimes require that institutional investors may need to readdress maybe some of their mandates and investment policies, and and at least internalize and understand some of the risks that are there. And I think that if I look at the end of Andrew's presentation, it said none of these things are insurmountable. So if you're advising an institutional investor, Andrew, are you telling them that, you know, this is the place to go, you need to be making those adjustments and things like this, that the risks are all manageable and we can get there?
Yeah, effectively, I think that's it. And there is, the market is much more, whilst there are still challenges, and you know, there's challenges with regulators and educating people, the market is much more advanced than it was when we were starting out advising these kind of companies 5, 6, 7 years ago. They're generally, the people that we talk to, there is a much more advanced understanding that just because Bitcoin and Ethereum are volatile, that doesn't mean the tokenization of real estate will be. You know, we were having the same conversations a few years ago over and over again. We'd sit in front of regulators and they'd be saying, you do this long presentation, you'd see the company doing this long presentation about what the project looks like, and this is why they want to get regulated. And then at the end, the first question would be, I know it's nothing to do with real estate tokenization, but is Bitcoin just used by drug dealers? And you see the guys just going, oh God, just bang my head against the wall. We're a bit more past that, thankfully now. So yeah, I would never say it's not on us to say to an institution, or institutional investor, this is a good thing to do. But what we can say to them is we can find a way through it legally and in a tax efficient manner for you that works. And if these secondary markets open up, it's hard to see how this could not be positive for anyone involved in the sector.
Absolutely. And I was talking to the guys at QPQ about this, one of the companies I advise as well, and that, you know, thinking about, okay, a $50 million offering for financing a real world asset, right? And then tokenizing that $50 million offering. Who is going to be most comfortable doing something like that? Say it's a ship that's being financed, right? Well, most comfortable doing that would probably be a family office of a shipping magnate, right? And they're going to have their investor group that they typically go out to. And you've got a $50 million offering now being fractionalized out to, instead of say 10 different investors writing checks of 5 million each, you're going out to 100 to 1,000 different investors. And all of a sudden you've got a big $50 million deal done on a real world asset on a blockchain, you know, for simplicity's sake. And I think that's the way this is going to go. You know, we are very much at individual investor, wealth affluent investor, moving up the chain now. There's lots of corporate interest in, well, crypto assets, you know, that are trading every day right now, but it is kind of connecting those dots and not always just being, hey, you know, I've got a security token for you. It's, hey, I got a pretty good deal for you, you know?
Yeah. And we see, I think, you know, we can look into the recent EIB issue. We had Santander, SocGen, the Bank of France, and Goldman Sachs all participating in selling a bond that was issued on the public Ethereum blockchain.
Yep.
So, you know, these things are happening. But you're right. I did want to ask, you know, Mahesh, you know, Hong Kong, Singapore, you know, homes to many family offices that are looking at this sector. They probably have a lot more flexibility than you know, pension fund that has very tight mandates and things like that. Is this, do you see them similar to Pete as as a first mover in the asset management space when it comes to
from the many that I've talked to, they're still trying to wrap their head around what is blockchain. For those who don't delve into the tech space, I think the knowledge of tech space is big data. And that's really still coming back to about real estate, right? It's about real estate of data versus real estate of land. But getting them to wrap their heads around. But I can only share with you that the younger generation, people who've come out of university, who've spent 10 years on the field in their respective family operations, do understand the value of blockchain, and they are looking much faster. So I think really, if the family offices don't wrap their head around this as a sustainable form of income, then they're going to lose out. And knowing how competitive Hong Kong is, no one wants to lose. Everyone wants to be ahead of the curve. And whoever has the Ferrari, the newest Ferrari, the neighbor's got to get that tomorrow or yesterday. So I think it's coming to being. It's just that the regulation, if we're looking at, many of them are their holdings are publicly listed companies. So they're trying to look for the regulators to provide them with some kind of bandwidth to understand really what are the risks involved. But getting involved in it, if they're big name players, advisors, legal advisors, financial advisors who are aware, they're ready to dabble. Now, when I say dabble, the place that they're entering in is the trade. They're actually given fund managers to trade in cryptocurrencies, where they know that they're going to earn their comfortable 8 to 12% mandate every year. But no one's actually going out and venturing into what is a blockchain-driven company or driven asset. And I think that's coming. I think we're months, if not maximum a year, away from that exploding in Hong Kong.
So you're saying the real estate tokenization is going to be embraced by the
I think
Hong Kong market?
It's going to talk. There is talk. There is a lot of talk in the market with family offices on this.
Fantastic. So I see a question coming up here from John. I think one of the features of the features of the space is that there's a lot of tokenization platforms out there. I would say that the early mover in the space was people building on Ethereum, but that is not necessarily how everything will go in the future. We have, Algorand have made some moves in this space recently, as have other blockchains. So I'm sure Algorand have a lot to say about this, given they're a sponsor of Blockchain Ireland. But I would say at the beginning, right now, the ones we've seen are generally on Ethereum, but who knows where the future will go. I'm not sure if any of the panelists have a particular view, or hard or otherwise, on Ethereum versus the rest.
Yeah, well, I think Ethereum has it's victim of its own success, because it's the first smart contract capable blockchain. It's almost 10 years old. It's running on a proof of work. It's energy intensive. The transaction takes forever, and they're really expensive because the network is overloaded. So I think Ethereum reminds myself to the Commodore 64, the first computer everyone had. And then afterwards there came a lot afterwards, which was much more capable. And I think there are many other options coming up. For example, there was Polygon, which is a layer 2 chain to Ethereum. We'll see what the future brings, but I think Ethereum had its best times in the past.
Interesting. It's okay. We're coming with 5 minutes left, so maybe I just asked our crowd if there's any final questions. Please submit them now, so that we can. Our crowd, by the way, the poll has just come back. I'm not sure who can see it, but 95% of the people on this call would invest in STO, property STO. let's get a few more through the system. So yes, is there any final questions from the audience that you'd like to ask now? Because if not, maybe I could just round off by asking our panelists, just what do you think will be the most exciting development in the property tokenization space, and by the end of this year? Yeah, But for me, it's I think where real world assets meet the crypto world, and I think that nexus will be very exciting in DeFi. But let me listen to the rest of you.
For me, it's quite plain and simple. I think the ability for certainly, young generations now seem to be much more savvy at, I hear younger nieces and nephews, 18, 19, 20, saying they've started building a portfolio, stocks, shares, crypto, to open to that generation access to property investment at a time when it is still very hard to get into, and for a lot of people completely unattainable. I think, Mahesh, you said 21 years on average to save for a deposit in Hong Kong. That's just insane. I think in London, average first-time buyers 37. So I think that the ability to still have some piece of that, I think, will give people some shape of comfort.
Yeah, go ahead.
Mahesh, go on.
No, I'm just saying, I mean, to add to that, yeah, I agree with Brian, and also agree with Andrew, is that it's really the youth that are powering this. And I think it's the youth that are interested in blockchain and the crypto assets. The only thing that needs to overcome is the get rich quick type of mindset. And a lot of the ICOs, I think was mentioned earlier, is that anyone and everyone, I think Peter was saying this, that is launching an ICO. I mean, look at just Doge and Shiba and all of these guys, and they've come out with coins and tickets that anybody can write. So it's really the appeal to the get rich quick scheme thing has to change into what we're trying to do here is to say that there's actually tangibility behind the token, is an asset that you can participate ownership in. And this is really where we're trying to bridge the world of the old into the new, addressing to the young people, the young investors who want to have some security of wealth. Now we're saying that security of wealth, we can actually, rather than sitting in hyperspace or hyperloop of digital ones and zeros, there is a physical asset that can be attached to it. So it's really getting the marketing to address this point of inflection that will eventually come. That's my end.
I totally agree with you, Mahesh. I think the beauty of STOs in general is that you're complete within a legal framework. You're complete. You can be creative in the structuring of the token. So this is number one, and in connection or in combination with the new technologies coming up, where we don't know on which blockchain we will issue tokens in 1 year, and looking at DeFi on a daily basis, new projects are coming out. The market is moving so fast. I think 2021 and the following years, there will be a huge development in the whole ecosystem, and we are by far not there we want to be as a company in the space, but also the market in general, and therefore we are very excited to be on this train now, at least.
Any last comments? We're pretty much there at our time. Maybe we'll do the next 2 hours on DeFi, but not today.
Let's do it.
So thank you very much, everybody, for attending. Thank you, the panel. Thank you, Blockchain Ireland. And I hope the rest of Blockchain Ireland week is as fun as this.
Thank you. Thanks, Brian.
Everyone.
Thanks for hosting.
Thanks, everyone.
Gentlemen, pleasure to meet you all.
Thank you.
Thank you.
Bye.
Bye.
Bye-bye.
Bye-bye.